You mentioned about you have a way to acquire multifamily that's kind of special. Can I guess?
Yeah,
Mortgage method?
it's close, but it's not a Morby method.
Okay,
So
all right.
it mimics that in a way. It's actually called an.
Garret,
Yeah,
I just met you in the hallway literally like, I don't know, a minute ago. Did you just join Owners Club this year?
this
Your
is my
first year?
first year on this club.
What made you decide to join?
I was in a career. I was in it for 8 years. I was in law enforcement. I was on our SWAT team in the state that I lived in, and I was in the Marine Corps before that. And truthfully, when I started to get into this transition phase and like, oh, I'm going to resign from this for a whole bunch of, that's a whole nother long conversation. My thought kind of went to what's the SWAT team of real estate? And I thought, well, I ain't sub two. Owners Club is kind of that next level of
Level up.
challenging and people who are doing big, crazy, scary things and push me.
We're dreamer and we're action taker.
Exactly. Full of them, right? Full of people doing things that have inspired me even the last day.
Right. So you're a Marine, and are you still doing your Marine job, or you retired military?
No, yeah. So I didn't retire from the military. I got out in 2015. So I did 5 years total in the Marine Corps.
Okay.
I got out. I chose a wife instead of a career kind of thing. Writing was on the wall. Yeah. So still married, very happy, 3 kids. And so it's been a really, really awesome journey.
Right. So where is your market? Where do you live?
So I live in Oregon. We just wrapped our house. I've been saying for about 6 months, we're on our way out to Phoenix. We have family out in the Phoenix Valley. We've actually been wanting to move there for like 3-4 years, but it's just been a really slow, steady thing. So again, October 2024, just resigned from my career in law enforcement, resigned from all of that. And we just went all into real estate. I've been doing real estate for about 5 years. So 2020, I got started as a realtor, just did transactions, and I started getting into some of the more investment side of things. Got a little portfolio going, and then I started saying, you know what, we got to go all in. Started doing multifamily.
Really bigger deal.
And now we're in contract on a 243 unit in Tulsa, Oklahoma. So
Oh my God, 250 what?
243 units. Yeah.
What do you think?
Yeah.
Wow, that's a pretty
That's a
substantial.
big jump. Yeah.
So what was that before you reached that 240 plus unit?
Single families. Yeah. And yeah. I mean, we gone through the process on a 16 unit. Everything was set. And that was probably one of the biggest like realizations, like things go wrong fast. Like everything was set, closing was set, LLC was set. I interviewed a management. We had everything all ready to roll.
Okay.
And ultimately what happened was the lender and the double closers and wholesalers weren't lining up on closing. One was working on calendar days and one was working on business days. And so on the letters, they didn't line up and everyone started getting mad. And so,
Contract failed out.
yeah,
The day
exactly.
wasn't like,
And they wouldn't extend. They wouldn't extend.
dropped it.
Yeah.
Oh.
And I think in the end, like,
Sure.
I look at like, okay, I dropped the ball because at the end of the day, I pieced it together. I dropped the ball, right?
Yeah.
And so to me, I like to take the ownership of, okay,
sure.
where could this have gone better? I should have clarified that. I should have done these.
That's a really good trait as a responsible owner and entrepreneur, because instead of claiming other team member, you're the person who's helming the ship. So the reason I stopped you, I want to put this on camera, ask you this question, because when you mentioned about you have a way to acquire multifamily that's kind of special.
Yeah, so I actually didn't know what it was called until recently. Real quick, I grew up thinking that my mom invented garlic bread because I didn't know anyone else. And then I found out, oh, everyone else's mom does the same thing, right? Exactly. So I was new to me, so I figured it was new to everyone. No one had heard of this.
Can I
So,
guess?
yeah.
Morby method?
It's close, but it's not a Morby method.
Okay,
So
all right.
it mimics that in a way. It's actually called an equity recap. And I didn't know what it was until I met Vina Jetty. And Vina Jetty was the one who said, oh, it's an equity recap. And I said,
Okay.
oh. Before then, I called it an LLC retention method. Because what we're doing is we're keeping the seller in place. We're being added to their LLC.
Okay.
They drop down to a 10% owner as required by ICC.
Controlling interest of an LLC.
And then on that entity, this is again, like there's a lot more to it, but that LLC now does a cash out refi, and we use a 75% Fannie Freddie back DSCR.
Right.
We're going to give them, it breaks down to about 70% of the 75 because everything else covers fees and acquisition, legal, closing, all of that.
Right, because you need about usually closing costs come up to be about like 5%, right?
Yeah.
You have like attorney fee, a lot of paperwork stuff.
So everything will pay out. It'll cover that. And if there's an acquisition for us, great. Otherwise, it just goes into essentially what we're having to pay everyone.
Okay.
So they get about 70%, 70. That also covers their underlying lien.
Right.
So let's say they have, a third of that, or let's say it equals 30%. They're going to only walk away with the difference of that.
Right.
And so now they get that, but they don't have to 1031 exchange that.
because it's in the LLC. There was
Yeah, they just, to them on paper, it looks like they just did a cash out refi, right? And by keeping them on the entity, it's not a disguised sale. So we stay in compliance with SEC laws because
in
they're
the
still
low
it.
term, well, you did switch out refi. So some people, I've heard some people they would do that to buy the LLC out because they like the favorable loan term they want to continue.
But
So
we don't want to buy the LLC out for them or do a stock exchange or anything like that. We want them to stay in it. Like, so this one in Tulsa, it's an older couple. They've had this asset for about 40 years. And I love it because it's a mom and pop. When I talk to people who have done this model, again, like when I finally realized, oh, people have done this, like I've talked to attorneys like, yeah, we've done this. Like, this is not new, man. You didn't create this. Like, oh, it's just new to
hey,
me.
but smart people think alike. So
Yeah.
you reach out to that with your own conclusion and realize that
Exactly.
being done.
And it all boiled down to some of these deals that we had that were falling apart. It really was, how do I solve this problem? And I just eventually solved the problem in a way that I thought was like, oh, this is so unique. But it's like, it'd be like coming up with, I've never heard of sub 2 and coming up with a sub 2, like, I created this thing. Like, no, you didn't, man. You came across it, right? Your brain just led you to it. So it's awesome because having the people who have kind of done that, what it did for me is it kind of reaffirmed, okay, cool, we are on the right track. We're not doing something crazy. He's already done that,
It's
right?
legitimate
Yeah, and so
strategy.
it just worked. And when I've talked to people about this method and like, hey, what's the biggest con of it?
Right.
They say it's like, well, you're leaving the old owner in it. I say, well, what's the biggest con to them? They're like, they're bringing you in. And the only reason that would be a con is based on who you are. So if you're a grimy person, it's a con to them. Like if you're going to run it into the ground, it's bad for them. If they're a terrible person and they're going to try and do all these things and make it fall apart, if I'm after you, what's your flow? But they're like, but if everyone's understanding of like what you're doing and everyone's on board and it's like, okay, we are actually going to be partners,
Right.
then that's a really healthy
I
way to do it.
think this strategy works so well with a special mom and pop owner. Then they will have vested interest in this deal. They will like to see you success because you become successful. They're still in it. So I'm gonna ask a little bit more questions so I can understand how they got paid. So I understand this is not a typical refi, right? So that you came in, you basically buy out their membership interest. Feel free to correct me.
Yeah, so not buying them out because again, we're not buying it from them. What we're doing is we're all partners now.
We write the operating agreement.
Op agreement gets adjusted. Now we have a majority share. But the incentive is they are going to get paid when we do a refi. We're all owners. Well, who's getting paid what? You're getting paid 70% of the value of this property.
Oh, I see.
So they're getting a large tax-free incentive on the front end, but they're still a partner on this deal, right? They're still in the deal. They're a silent partner. They don't have a say in things, but they don't have to operate it. Now we're also doing a seller carry for the remainder, 25% because that 5% pays all the fees.
Right.
So they're 25% interest only. Usually we would say you also get cash flow because you're a partner in this. What percentage are we going to give you? We're not going to do it for this one because they wanted a higher interest. They wanted 4%. So we're going to give them 4% on their seller carry. But they're not going to get a percentage of cash flow on top of that.
Just straight note, holding the note.
Yeah, correct. And then this is why it's called an equity recap, is because at the end of the term, so we have a forced 10-year balloon on this DSCR, a Fannie Freddie DSCR, at 10 years. So at 10 years, we have to refinance, probably back into a 10-year Fannie Freddie. Like we'll just keep playing the game or we'll sell it. But if we refi into that, then ultimately that mark, they're going to get 30%. In this one, it's actually 25. They're down to 25%. So they recapture equity in 10 years. So when the property's worth more in 10 years, they're going to get 25% of what we're able to pay out at that part. So they're getting paid
basically the future appreciation. They would get about 20%,
25%.
and the equity built out in the future. That's when they get a bigger windfall, basically. But right now, they're coming back, holding the notes, a secondary position behind Franny.
Not even in a secondary position because they're just on the operating agreement, right? And so it's not that we're creating a new note. It's more like you're still an owner on this deal, and here's what you're going to get paid from what's coming in.
I see.
And it equates to as if we carried a secondary loan on it.
I gotcha, because they're on the percentage. So when you say, okay, I'm going to rewrite this operating agreement, I adjusted your membership interest down. Now you own a majority controlling interest. So how they would pay at the refi, right? You structure the term.
Yeah.
Was that considered like a realized profit for them? Was it taxable?
No, it doesn't go on their basis or anything because you're creating a debt. So the same way that if I just do a cash out refi on a property, just me that I've owned, I can't be taxed on that. And so part of that is having CPAs, securities attorneys, and then the attorneys drafting it. They all get on a call. They're like, nope, here's how this is going to be because you are still here. The caveat to that is it can't be a disguised sale, right? It can't be like, hey, you're out, you have no involvement, you're gone, because then that's a taxable event because it's just a
Gotcha.
disguised
But
sale.
they're still in, so they're still.
Yeah,
So
they're still a
for them
partner.
in
Yeah.
IRS, they're not. They haven't sold that yet.
Yeah,
They're
so
still in.
they've just
Okay.
allowed, I mean, similar, I mean, this isn't quite the same, but the way my brain had to like understand it was like, okay, if I have a family trust
Right.
and I add my children to it and I'm going to bring them on and say, I want them to be the beneficiaries. Obviously, it's not the same as this, but
Right.
they're now the majority beneficiaries of this
You
trust.
just swap the beneficiary.
Yeah,
a little
but I'm
bit.
still on it.
Right.
Like I'm still in there,
Right.
but now they're the ones that if something happens, they get all these assets or whatever it is. So that's not quite how it works, but like that's how my brain has to explain it sometimes is like I'm
Gotcha.
adding people to it. That's okay. I'm
Right.
reducing my ownership, but I was still there, not doing anything in violation because I'm
Right.
leaving the seller, we'll call him a seller in this case,
Wow.
in there because they're still a part of it. And what's really cool about this is, again, a mom and pop, they're in this deal. And the big thing for them is their loan was maturing. So they're like, what do? We just get a new loan? We're getting older. I don't know. They didn't really want to sell it, which to
Right.
me was great because I was like, oh, that's incredible. It must not be a bad asset if you don't really want to sell it.
Right.
And so we had to kind of like talk about that. And the fact that there's such a benefit to them in this sense, the con is ultimately they get less than if they sold it on the front end. But now they have a consistent income every month, which is amazing. So they can retire, they'll live their life.
Right.
And on top of that, they still have a vested interest.
So another lump sum for later on realized in 10 years.
And it'll be higher. And these aren't the exact numbers, but let's say it's $20 million and they're only going to walk away after all their old liens and everything's paid off. They're going to walk away with $6 million in their pocket. Well, like the total value other than that, in the end, they're actually going to walk away. So they sold for 20. They're going to walk away with a combined gross income of like 24 million. Now that doesn't mean that's all what went in their pocket.
Right.
They had 6 million and then an additional 4. So now they're 10 million net,
Right.
which they wouldn't have got if they had sold conventionally. They would have walked away with it.
Yeah, you're like rinse out, like basically that's it.
So it's a really cool structure because it works for certain situations and it
Right.
works really good with this seller. And they're like really,
Excited about
they're excited and they're nice people. They're messaging us like, hey, like, where's your contract? And I'm just like, we're working on it. We got to get amendments. But a lot of things have come up, I'll be honest, where we didn't think about it, where it's like, okay, like one of the questions they had is like, what protects us? Let's say in 2 years from now, you guys just turn around and sell it. And we were waiting for that 10-year because that's where all that growth and all that
They
appreciation
will
is.
have to sign it because they're the LLC owner.
Yeah, and so we've been like, okay, well, we have to have amendments in place and things that say we can't just because you're out and you're a silent partner, you don't get to say like that's like
Their acknowledgement or a
Yeah.
defiance. Yeah.
So certain components of that we've had to, okay, let's put that in a contract. Let's make sure we touch on that. But also like there needs to be things that hold them accountable in case we need assistance and compliance with things. They can't be like, nope, that's not our problem, I'm out. No, we're partners. Like that's what we're doing. We're creating a partnership.
Together.
But they're like, oh, this is like a sale. It's like, it's not a sale. We're partnering. You're just getting all of the cash out refi essentially on the front end, and then we're paying you throughout this process a higher percentage. And I do my underwriting. I put it in there. Everyone has their piece. And I just show them, this is what I'm making. This is how much we're buying it for, acquiring it. I should not say buy, but acquiring it. And this is how much you're going to make it. So they can see exactly what we're making, what they're making, everything that they're saying. This is taxes. This is insurance. These are our costs. This is our PITI. And they verify numbers. And so we're able to get on a Zoom call, walk through it, which keeps us all accountable.
There's very like honest and transparency. I think that's why especially I think a lot of older couple home and pop they own that. Like you can't really fool them. Like you have to be as upfront as possible, as transparent as possible, and that's how you build trust.
Well, it's like Marcus was talking about today. He's like, this has been their baby for 30 to 40 years, right? And so how do you come in and say, I'm going to take this and I'm going to carry it forward and improve it? And I'm grateful for what you did. So I even had a call with the current owner, and I was on a phone and I just said, hey, I want to fly there and walk it with you, right? I want to meet management. I want to meet the people that you have, and I want to like ensure them that like we're doing a good job. We're coming in to do a good job.
Your tenant, make sure review the neighbor and all that.
Yeah.
So how'd you find this deal?
This deal came to me. I actually didn't find it. I don't buy in Oklahoma. This is, this is out there. I focus in Texas as the primary market I focus in. And the people who normally bring me deals had a deal. Me and my partner, we looked at it. I scrubbed the list. I said, I'm not going to look at that. I didn't even want to look at it initially. It's like, oh, that's in Oklahoma. I don't buy in Oklahoma right now.
Out of buy box, yeah.
Yeah. And so I was like, I don't know, maybe one day. And my partner's just like, well, why'd you skip this one? I said, I don't know. Like, And so he did a quick underwriting. He's like, this might be pretty good. And so I took a look at it, and that's when we really started this process. But it was sent to me by some wholesalers who are in that space that they wholesale large
They made assignment fee, I imagine.
Yeah.
When they approach you, did they say,
Well, I should clarify.
Yeah.
They won't technically be wholesalers in this. They're more of a connector because they aren't structuring this. What they did is they showed us, hey, here's a deal. What would you guys be able to do? That's kind of our structure. So they can structure it as brokers. They can structure it as assignments. They can structure it either as a fiduciary or just a contract. And we just say, hey, we can pay you the same as what an assignment would be. But because they're not creating the contracts, they're not getting it in contact. We're the ones doing it all. So we're like, we'll give you something. For sure, you brought us a deal, but like,
Right,
I
but
have
you
to
did most of
do.
the work, so it's not, okay.
You guys don't have it in contract. I have to get it in contract.
Right, you put it to the cozy, you put everything together. So it's more like a connected.
Yeah, exactly.
Okay. Well, you must be the smartest Marine I ever talked to today.
Hey, well, that's a compliment. I'm Garrett.
Very nice to meet you. I'm gonna dive bomb you. I just want to say hi.
Nice to meet you. Yeah.
I know,
Perfect. I'm Orion, I guess. Yeah.
I know. Lori is so cool.
Yeah.
If you haven't met them, I encourage you to talk to them.
Yeah.
So her husband took me on a single engine airplane yesterday.
Cool.
Yeah,
That's
they
so
took all
sweet.
the OC member out in the air. So it's just so funny that once you get to the more filtered room, you never know what to expect.
Yeah.
I came in, I just got a cold text from her. It's like, hey, we're taking some OC member up in the area. Would you be interested? And I responded,
Cool.
wait, plane? You're
Yeah.
talking about the airplane that fly in the air.
I just flew in. Yeah. Why would I? What do you mean fly out? Yeah. Which is awesome.
So I was like, yeah, I'm doing it.
And that just speaks volumes to like the room, right? The owner's club room. Like I don't have like this weird like rose colored glasses. I get like everyone is different and everyone's doing different things. But like for me, what's really exciting just today alone, like I've gotten to share kind of, hey, here's something I'm working on. I don't have all the answers. I'm not the expert.
So like,
I'm going through
space,
this. I'm currently going through this. I'm figuring out what works, what doesn't. My partners and I are all figuring it out. I'm very, very fortunate and blessed and grateful for the people I get to work on this deal with.
Right.
Because it's so amazing to see the depth of knowledge they have that like gives me more knowledge. I can take that to go and grow. And then when I share that with people, they have such really cool insights of how they've done other deals similar in a different way, but it allows me to be like, oh, I didn't even think to do that. Like it's just fun to see that, right? The Onus Pub community and people doing these just amazing things, right?
Also,
The SWAT team of real estate, right? As I like to say.
so equity recapture. Now I get it.
Yeah, exactly.
Pretty cool.
They're recapturing their equity at their exit, right? So they will be taxed on that more likely than not because it's a sale at that point. And their basis will be
It's the eventual sale, like when you guys just go
at the 10-year mark. So
10-year mark.
yeah. And so it's the big thing will be like, are we gonna sell it? I don't know. Are we gonna do another refi and keep it? I don't know. Like it's 10 years from now. I have no idea. So the goal is to keep it. That'd be incredible. The big thing that I really love about this is the power of like, I need a KP if I'm gonna go buy a large multifamily. Yes. To leap into that space,
Right. So who's your KP and this year?
the current owner. And that's the really
That is
cool
so
thing.
smart. That's so smart.
Yeah.
I was just chatting with a couple of multifamily investor. I think especially the very first deal is the most difficult one. I'm in that space right now. I'm trying to get into the first one. You know, I've been LP for a couple of syndication, but I just decided, you know, I don't want to always stay in the back seat. I want that controlling, learning experience to own our first larger commercial asset, right? So the KP is so important, like especially you don't have the experience.
Yeah.
That is so smart.
And so
That's
by
so
closing this asset,
Yeah.
I can now KP for myself on the next year.
Right.
And that's why I'm like, that to me, when people, I've had people look just like, oh, the numbers, you're not making as much. You could be making more if you didn't pay. It's like, the value isn't in like all the things, right? The value is in you close it and where's $0 out of pocket,
Correct.
right? And so $0 out of pocket, we pay ourselves.
Right.
We generate an income every month. We now have a large asset that we can now KP in that space and maybe a little above, right?
Right.
And we have a whole pipeline of deals that I currently have KPs I'm having to put in there. And
Now you can
awareness.
shape your own thing in the
Correct.
future. That is so smart.
Yeah.
Are you planning on kind of managing that remotely, or are you gonna start interviewing property management company locally? Because that's outside your bylaws.
So there is a on-site property management in this complex. We're still in contract. Otherwise, I would just say what property it is. Amazing, amazing complex for us and kind of the structure that we're doing this. And so for us, as we go through the process, we realize, okay, we have management already in place. It's performing well. So it's really just building those relationships. And I love how Marcus put it today, like showing that, hey, the seller is still like, they're invested in
baby.
it. Yeah, they still have an invested interest in this succeeding to maintain that kind of loyalty and show we want to honor that and carry it forward. So I really am excited that like the on-site management, it sounds like they're like, hey, they're great. We want to keep them in place. I'm excited that we don't have to come in and just tear everything apart. Right?
You
Hopefully.
build on that.
Yeah, and improve it. And then
Perfect,
again,
easy transition for you.
hopefully, right? Probably not. Let's be honest. Let's be honest. It probably won't be, but that's okay. Like
Oklahoma, which city?
Tulsa. Yeah.
Tulsa.
Yeah.
Okay.
Yeah.
Okay.
And so again, never bought. I've actually only driven through Oklahoma. That's it. That's my experience in Oklahoma. But again, for me, it's my entire life, my entire background since I turned 17 and joined the Marine Corps and deployed by 18 overseas. Like, it's figured out. Like, you're in it and you're a professional problem solver, right? Like, there's a problem. It's like
You
we will have
fix it in a way. You fix the term that doesn't work and then
exactly.
come up with a new term. I think that's why I love being in this community so much about like how to restructure it, how to find a win-win solution by being so creative. That make the seller couldn't even say no to you. Now they're so excited to close.
Yeah, when they're reaching out to us to get in contact.
Hey, give me the paper.
Yeah. Hey, what are we waiting on? Like, are you guys still interested? It's like, yes, we are. Right. Like, and it's great because even before we were like fully in it, like they were willing to send like very transparent due diligence documents. Because like, here's like showing you that we're being honest and transparent and hopping on calls and Zoom calls with us. And I really love the component of like the relationship. It's like if you can show transparency and you can show here's me, like here's my
and also integrity. I think they bought into like just by speaking with you, I can tell you have high integrity. You don't hide around, you don't beaver around the bushes. You're just gonna be very upfront. Hey, this is what I'm gonna make. If I purchase this, so how much you're gonna get. There's no.
And here's why we're doing it this way, because the benefit to me is this. Moving forward, here's how I plan to implement this, right? And just let them know, like, I have no desire to come in and let this become dilapidated. I don't want to be a slumlord. Like, I want to succeed in everything I'm doing. Here's my bio. Here's my portfolio. Here's my partner's bios and portfolios. Here's everything. Would you like to work together and be my partner? Like, that's really what they asked us. Yeah. So that's it.
Wow. Thank you so much for doing this, like just on the spot with me. And thank you for interject my conversation with Adam.
Yeah, absolutely. It was great. It worked out awesome. And again, like not even knowing you before and getting to like chat about this. I mean, it's cool. And it's fun to hear all the things people are doing and find ways to say, cool, like that's similar to what I want to do, but different in a way that inspires you to try something new. So my selfish intent is to go through this process a few times and figure it out and learn all these things and say, cool, this is what it was, but here's all the things we learned and had to add. And then bring that kind of package to say, okay, here's like the lessons learned. So when someone else says, I want to do this, right? Like Courtney and Johnny talked about, like create the rooms that don't exist.
Correct.
I love that. I was like, what if I create an equity recap room? Like, I'm sure people here, in fact, I know people in sub 2 Aaron is
It's the first time I heard about it. It's pretty genius.
I've 2 other people, I can't remember their names right now, but I've talked to 2 other people who have done this method on a different type of asset, right? Not a multifamily.
Not real estate or real estate?
In real estate, yeah. So like mobile home parks and RV flats, things like that. So the fact that it works on those as well is really cool. I was just talking to someone today about implementing on a deal they have. I was like, well, if they want a higher amount than what it's worth, maybe an equity recap, because you give them what it's worth now, but if they want to stay in it, they'll get more.
Future.
Yeah, it's just, it's kind of a cool thing. So my hope is to figure it all out, go through the process, and then provide kind of here's how to do it to people who want to kind of implement that so they don't make mistakes and run into the hurdles. That we're enjoying the journey because this isn't my active income. This is like, let's go do these cool things. This is kind of a side hike. So it's nice to be able to work on a project like this. It's more of like, I don't want to say a passion project, but like it's hard, it's challenging. I have no idea what I'm doing half the time. I'm like, I'm going to figure it out. And now we figured things out. Now I know everything I've done, and now I'm just like, let's do the next phase, right? Which
That's
is
awesome. That's awesome. Well, we're gonna leave your contact information in this video in the description so everybody can reach out. Your buy box still somewhere close to Oregon, or now you're looking nationwide?
Yeah, so I'm physically in Oregon, but again, like we're moving out to the Phoenix Valley. We've been saying that for a while, so I want to preface with like we're working on getting that done. We sold our house on a wrap. There's been a lot of little things that we've been trying to button up and get out there. It's also June, so it's egregiously hot in Phoenix right now. So there's not a huge rush in this exact moment, but we'll be out there soon. I'm really excited. Hopefully by September is the goal.
Well, best of luck to you.
Thank you so much.
Just think
Yeah, I
for
appreciate it.
Jerry.
Yeah, thank you so much.